Let's build on that and then give control of the asset to the investor. Let's give the investor control of when to liquidate the asset. The investors control when they want to exit. It's like an exchange. Buyers and sellers come together and agree on a price. Cost can kill any good investment.
Today on TCAST by TARTLE, we welcome a true titan of financial innovation, Alan Snyder. Alan is the founder and CEO of AShareX, a platform revolutionizing fractional ownership of high-value assets. With a legendary career spanning leadership at Dean Witter, first executive, and the founding of Answer Financial, Alan has built, scaled, and reshaped industries. Today, he's doing it again, giving investors unprecedented control, transparency, and access through AShareX. Alan, it is an honor to have you here today.
It's an honor to be here, and thank you. I'm blushing after that intro.
I want to get into, because this is just super cool, this vision that you had for AShareX. It was founded to democratize high-value asset ownership.
Yes,
What
sir.
personal experience or industry gaps, what inspired you to launch AShareX?
What inspired me was having managed pretty much most of the product areas of a big securities firm, then having gone out and acted as an investor through a family office that I set up. I said, there has to be a better way to participate in alternative assets, which are growing like a weed. We're all collectively prisoners of our past. So that was what got me into it. And I said, not only do you have to democratize the opportunity to invest in these assets, you got to empower the investors to have a better deal than is currently available.
Do you envision fractional auctions as a solution, and how did you come up with that for AShareX?
You know, it struck me, having been a money manager and seen other money managers, let's create, like I did in the insurance business, I created an insurance exchange. Let's create not just another money manager, but let's create an exchange giving true price discovery. You know, how many real estate investors, Jason, have told you that the price at which they buy something determines whether they make money or not?
Right.
And the neat thing about an auction is, instead of a money manager saying, Jason, trust me, this asset is worth $50 million, we're saying, let an auction determine the price. So you get true price discovery in an auction. And then let's go beyond that. Let's build on that and then give control of the asset to the investor. Kind of refreshing almost.
Do you have an origin story for this? Like, can you share the story of when you started like really thinking like, I need to start this? Like, what was that process?
The aha moment. Well, one of the things we've done for years now has been a lender against museum quality artworks. And the more I looked at it as an example of alternative assets, I said, how many people can buy a $30 million Picasso? Not too many. And yet, as an investor, high quality assets have more enduring value. So I said, gosh, let's create a vehicle to allow people to invest in a Picasso, in a $50 million apartment building, all sorts of endless use cases for what we've built. Now, the technology was a bear to build. So that was the aha moment. I sort of went down the path, you've no doubt talked to endless people. And I said, gee, blockchain and tokens, is that the answer? And we went down that rabbit hole and we realized that the SEC doesn't recognize truly the immutable record keeping of a blockchain. They said, no, we've got to have full regulatory compliance. So we said, no, maybe in the future we'll do that. But today it's not viable. And I've seen a lot of companies, sadly, because nice people involved, go down that rabbit hole and never come out of it.
How did you overcome the technical challenges of aggregating fractional bids in real time? Like, I know you have a patent pending auction system.
Oh my God, battered and bruised. We had to build maybe it's the securities background. Had to build a system that could handle all of the edge cases in any trading system. So that meant, as an example, we had to integrate to 14 different service providers. That meant we had to do know your customer, KYC, anti-money laundering, had to do that. Had to integrate to 2 different broker-dealers. A broker-dealer, because they said once the fractional shareholder bidders win, what do they get to evidence their ownership? I said, got to give them a true common stock to evidence the ownership. And that meant had to clear the SEC, which we did. You needed a broker-dealer for that. Then if the asset is high value, let's say it's that $50 million apartment building, it'll probably be a secondary market. Oh my God, that meant you had to have another broker-dealer to manage the secondary trading. Then it gets worse. My youth in building the Discover card, I said, want to be sure that people are not getting over their skis. So we had to create and integrate to a credit provider so that we could credit score every bidder and establish a bidding limit that would be comfortable for them and they could execute against. So I had to do that. Had to have a FINRA and SEC approved transfer agent to keep track of the shareholdings. Had to have a cash custodian. Oh my gosh, a cash custodian with a bank so people know that their money is safe as we collect it after having done an auction. So that was a lot of work. Then all the payment rails with Plaid, ACH, all that jazz. So that was the undertaking. And we wanted to prove that it worked. So we did a couple of auctions. Hold on to your boots. We processed more bids in 4 minutes than I think any auction house has ever processed. And the system worked. Yay. So we did that. Then we issued the stock, cleared the SEC. It's a common stock, and it's neat. It's a Reg A plus Tier 2 offering. So you have regulatory oversight. Boy, kind of refreshing. Versus most alternative assets are deployed through what's called a Reg D offering. And we can go down that if it's of interest.
I want to, because this is something, and I know you were intentional on this, the investor control and transparency. Because this is something, like at TARTLE, we're big on this having a data marketplace and people owning their data. So what I thought was really interesting is the platform emphasizes market-based pricing and investor-controlled exits. How did these features, how did you envision that to empower that experience versus kind of the traditional, way?
Okay, the traditional way is the money manager says, "Listen, trust me, this asset is worth 50 million bucks." So we said, no true price discovery. Second, the money manager says, okay, give me your money, and I'm going to charge you 1.5% to 2% a year until I decide to sell the asset. And of course, I have your best interests at heart, Alan. Don't worry about my annual fees. And of course, what happens is you get an extension risk because you like the fees. And maybe you're in this deal longer than you would like, and you can't get out. Ouch. I said, let's give the investor control of when to liquidate the asset. So every year, we conduct a vote of the shareholders. And if they vote with a simple majority, they say, sell the bloody asset. Wow. Now that's empowering. If you put up the money, shouldn't you get a chance to control when you want to exit? So we do that. So you have price discovery, number one. Number two, you have the regulatory oversight of the SEC. That's powerful. Most Reg Ds are exempt from that. Third, you have this empowerment. The investors control when they want to exit. I think that's pretty compelling. And you think about it, there are endless opportunities to use this system for multiple types of assets.
No, I love that, Alan. I want to get into market-based pricing because I think this is so interesting. You mentioned a Picasso. How does the pricing work? And when you say market-based, what are you referring to as market?
Well, it's like an exchange. When you're buying 100 shares of IBM, you're going into a marketplace. You got buyers and sellers that set the price. It's not a money manager saying, Alan, trust me, this is the price. You have a marketplace that determines the price. That's basically what happens in this structure. Buyers and sellers come together and agree on a price.
Yeah, I think this is so cool because a lot of people, whether it's, like you have, vintage automobiles, whatever it may be. So let's say you have a several $1 million automobile and people want to be a part of that. In a basic way, can you kind of explain that, kind of walk through like how, so let's say I have, $50,000 and I've wanted this, multi-million-dollar automobile. How do I invest in that through your platform in kind of a macro way?
Okay. You tell us about yourself. That's the know your customer rule. And then you say, all right, I want to be a bidder. So you fill out a form so you can become a bidder. Then let's go through a case. Let's say the bidding opens, at $1 million. Okay. The fractional bidders, independently of each other, they're competing. They enter if they want either a limit order and say, okay, take my 50K up to $5 million, or a market order. And it's kind of exciting because it's fun to see it happen. And I'll enter my order at $1 million to start. We aggregate all of the fractional bidders and say, all right, do they aggregate to that $1 million price point? If they do, they win that bucket. Then the auction advances, let's say, to 2 million, to pick a number. Maybe a 100% bidder comes in and says, I'll pay it at $2 million. All right. The bidding then goes, let's say, to 3 million. And the fractional bidders regroup and they enter more orders and they win that bucket at 3 million. It keeps going until there's no more bidding. And the last group standing wins the auction. So that's how it works. And of course, you can imagine you're creating all of this aggregation. Thank God for computers. You can do it. Now, I know in your warm up with me, you said, well, sounds tricky. Well, one of the things we learned when we did all the research for this, people go into charity auctions, Christie's auctions, Sotheby's, etc., Bonhams, but they're never as comfortable as they would like. So we looked around and said, well, when you buy a new car, for gosh sakes, what do? You test drive it. We said, is there such a thing as test driving an auction? And the answer was no. So we built that. We built Test Drive an Auction. And here's what you can do. It's on our website, AShareX.com. You can go in and say, gee, I want to bid on a Porsche. I want to bid on a coin, whatever. You pick it. And we ask you, do you want to bid as a fractional bidder or 100% bidder? Because we allow both. Then we say, how much do you want your bidding limit to be? You set it in that case. Poof, you go into an auction and it's randomized. So you can practice your different bidding strategies against hundreds of computer-generated competitors to yourself. And it's really fascinating because you get comfortable. You then understand how to do it. Again, empowerment, full disclosure. I'm a passionate believer, as are you guys, in that. And so that's what Test Drive does. It gets people comfortable for the first time, maybe in really bidding in an auction.
Yeah, that's revolutionary. And I know, one of the big things is democratizing access. And, AShareX breaks down barriers for entry to an ordinary investor. What type of assets? We've talked about cars, we've talked about paintings, art. What other opportunities does it unlock for an ordinary investor?
Well, think about this. We've built the whole tech stack and all this infrastructure. We have deployed it as proof cases in several art auctions. We are currently talking to a host of other people that say, gee, can I use this in what I do? Let me give you some examples. Think of royalty streams of revenue. A song, a music catalog. Wow. It generates through ASCAP a steady stream of income. Why not fractionalize the ownership of that? So it's not just, Apollo or some other big firm. You get to participate in that fan that you're a fan of a particular artist. So it can be a song, it can be a music catalog. How about drug royalties? Talking to a guy that wants to use it there. Here's a fascinating one, and this is sort of taking off. Let's say you have a star athlete. Let's say you have a star athlete generating, I don't know, $2 million a year in revenue. But the athlete says, gee, I'd like some cash now. All right. That athlete could sell a 20% share of his or her income, maybe for 5 years. Okay. What is somebody willing to pay me to receive that income? Wow. It's called an income share opportunity for a star athlete, all sorts of opportunities like that. Let me give you another one where we're talking to people. The Green Bay Packers, famous. Why? Because they have sold their team to all those Green Bay people, creating probably the most loyal fan base known to man. Wow. All right. Let's say I own, a soccer club in Rome. Why not sell a fraction of that, a piece of that team to my fans? Now they're as engaged as the Green Bay Packer aficionados. So it's that kind of opportunity. Another one, real estate. We talked about when I was a youth, I built a big real estate syndicator. No kudos to me. I was at a big firm. How about a $50 million apartment building, typically done as a Reg A? All right, auction it off, give people shares verified by the SEC or approved, I should say. And I can control with my other shareholders when to sell that apartment building. How about carbon credits? We're talking to another guy. Carbon credits has been an institutional game not available to many people. Carbon credits are powerful. Give people the opportunity to buy a share of a carbon credit. Or how about another one? Venture capital, private equity. We know the IPO market is kind of moribund at the moment. These venture capital investors that are stuck. And let's say the company that they invested in is worth now, I'll pick a number, $2 billion. And the management says, gee, I'd like to sell $100 million worth of stock. Well, there are deals done out there that are heavily laden with fees. Why not auction off that $100 million of shares in an auction and give people a common stock that backs that investment? Same kind of opportunity in private equity. Years ago, I worked with Goldman and Kelso in private equity. Same phenomena. Companies are they can't get out of these things. Wow. You're giving people the chance to participate on a much more favorable basis in all of these kinds of assets. Now, will we execute all those? Hell no. We will partner with a big music company that has the supply of songs and music catalogs, but they can use our tech stack and infrastructure to make it more widely available.
That's amazing, Alan. And there's so many, if you run with that, there's so many use cases. It's crazy. Like in your head, I was thinking of like some super genius data scientist that has a guarantee to work for Google, but he's in college right now. I mean, he could sell part of that income that, his asset out because he's a wanted commodity.
You're absolutely right. Income shares for that individual, that's one. When we filed the 4 patents that we did, the patent attorney, the law firm, does a lot with computer-based stuff. They said, Alan, you can auction off computer time. We think that's an even better use case than you've thought of. We'll see. As we get out there. Now, look, I'm an open kimono guy. It took us years to build this and a bunch of money. Can we execute it in all these different places? Hell no. We will, through like a SaaS model or a licensing model, we will rent it to other people to use and have the expertise in these different areas.
Yeah, that spider webs out. That's crazy. I want to kind of get into just a little bit because you're real transparent on this as the cost and fees, the innovation on that, if you don't mind.
Of course.
Can you kind of go into traditional alternative asset funds, what that looks like, and then what you guys decided to do?
Well, sure. A money manager buys an asset and they say, okay, I want some investors to give me my cash back. Sometimes they mark that up, sometimes a lot. Okay, we're not doing that. The investors are buying the asset, so there's no markup on the asset. Okay, there are fees, of course. There's a buyer's premium. When it goes through an auction, you have a buyer's premium that's paid by the buyer, not the seller, typically. And that can range from 15 to 25%. So, and that's disclosed. Again, kind of refreshing, true democracy. So there's a buyer's premium, that's a fee. Then the way we do it, if the fractional bidders win, let's go back to, you talked about that exotic car. We charge the fractional winners a fee because we will store that asset until they're ready to sell it. That's an expense. We will insure the asset. Every year we will conduct a vote. Okay. We will do all the accounting. Every year we will give them an appraisal of that asset to inform them, in addition to their own research. Hey, do you want to sell it? Yes, no. We will agree to do that for 8 years. So there is an end point. And if at the end of 8 years, if the investors have said, no, I don't want to sell it, we will sell it because we have a single fixed fee, no annual fees for that period of time. So there's no annual fees, which is typical in other structures. So there you have it. Now you compare that, us to other people, costs can kill any good investment. Our costs are somewhere between 100% and 200% less than other players.
That's amazing. How does AShareX cater to both like fractional investors and 100% buyers? How do you balance the needs and experiences of these two groups? And you do it all on one platform.
Great question. Thank you. We're saying, look, this is for all players. We're bringing, think about it, for somebody wanting to sell an asset. Let's take that music company that wants to sell a portfolio of songs. We're bringing this huge new cohort of potential buyers to the table. Ooh, if I'm selling something, what do I want? I want more potential buyers. In addition, there are 100% buyers too. So we're saying, let the fractional bidders compete among themselves and compete against 100% bidders. Now, if I'm selling an asset, maybe that gets a more reliable execution for me to know that I'm going to actually sell the asset. Wow, that's encouraging.
And you've said fractional investing is the future of finance. So looking ahead 5 to 10 years, how do you see the platform, AShareX, how do you see it influencing broader investment trends? And could it even go into mainstream financial markets?
Well, I think we will give uncommon access, and alternative assets are growing, trillion-dollar business in the coming years. It's high growth. Why? Because it's intense diversification outside of equities and bonds.
Right.
All right. And the mousetrap that we have gives a more compelling structure for the investor. Now, it'll take time. I'll give you one sidebar. When I built the insurance exchange, I said if you gave people the ability to comparatively shop for insurance and empower them, you might have a good business. The technology was as difficult as we experienced here, and we were early. It took time to get adoption. Eventually, we became the largest seller of auto and home in the United States as a non-carrier, and that took a bunch of years. I'm sure the adoption here will take time as people experiment in using our platform.
No, I love that. And this will be the last question, Alan. The global institutional reach. And I know AShareX's model appeals not just to individuals, but also to pension funds, endowments, global investors. How are you tailoring the platform for these large institutions that are seeking these uncorrelated assets? And then how could you accelerate institutional adoption for this?
More visibility, and thank you, Jason, for giving us some visibility here. I think that's it. It's new. It's unusual. The fact that we actually, every lawyer I know, for example, said, Alan, you tilt at windmills. You'll never get through the Securities and Exchange Commission. That was like waving a red flag in front of a bull. We spent a bunch of legal fees and we cleared the SEC multiple times. So, what do I think? I think it will take more visibility, more proof cases, more adoption, and then it could snowball, much like the insurance exchange ultimately snowballed.
Yeah, that's amazing. And Alan, I'm so thankful for the work that you're doing, the visionary outlook that you have. We're about decentralization and inclusive financial ecosystems, and that's what you built. So it's tremendous. When investors can truly own their assets, and for us, the data that surrounds them, it's something that's ethical and assists and helps people, especially in the long terms. I appreciate the work that you're doing and for taking all your expertise, your decades of expertise, and then building something, for the future.
Well, the only humorous thing to leave you with a smile, I hope. It's battered and bruised, never give up, indefatigable. That's what you have to be. And as my wife, who I asked her permission, I said, okay, I'm going to start another company, Sweet Buttercup. Is that okay? Because, I will bring 24/7 energy to it. She said, okay. She said, but remember, some pioneers are laying face down with an arrow in their backside. I don't want that to be you.
That's good. That's good. Thank you, Alan. Appreciate it. We encourage everyone to go to AShareX. We have a lot of tech leaders that listen to this, so it's exciting if you're interested in this. Not just but being an investor and being a part of this. I think it's awesome to be able to own something that has such great emotional appeal. So you're just not owning like IBM and there it sits. You're owning something that you can create an emotion to and an attachment to.
Great insight. Thank you for your time and your thoughtfulness.